Just talking about risks, and one of the mining towns right now, there's 160 houses vacant. Now, if they'd bought in there at the top of the market, say $700,000 for a mid-average house, and now they're getting no rent because one of the mining companies pulled the plug. How would you handle that?
Well, look, if they bought a house there, the investor would say there would be a 12-month contract on it, straight up. And they would have been getting ridiculous rent at that point in time. So $2,000 a week for an old house, say. So $2,000 a week over 52 weeks is what, $104,000. So if you're a smart investor and just fed that back into your principal or invested that elsewhere, then you've kind of offset the decline in that place for the moment. And what happened, Geoff, was that it went so ridiculous so quickly that it had to come off the boil. Like, if you buy there now, you're still going to get a 10% return, and the opportunity with about $22 billion getting spent there, the houses are going to be worth that in 12 months time again anyway, or have the potential to, you never know, but essentially, if you bought at the top of the market there, this is how extraordinary this place is. At worst, you may lose a small amount of money or break even because the rent is so high. They were getting a 30%, 20% return, or 15%, which is just ridiculous. So it kind of offsets itself. Yeah, that's what I think.
What we're talking about here is major opportunities to make money, and normally with the higher returns, there is a higher risk. So just make sure you have a buffer, that you have a plan B, the way that Matt set it up. Have a plan B that you will handle those, and know your risks. Know that what can go wrong before you even get into it, because there is money to be made, but some people will lose as well.
The other thing too is, Geoff, with these places, and you're buying and it's booming, if you buy to set up as to develop, like split the block or build another townhouse and stuff, you can still build that and you'll offset any loss. So say if there's a loss of 15% because it comes off the boil and your development just made 30%, so you just made 15% equity, although the market came down 15%. So if you implement these strategies like the Reno Kings have taught for years and years, and investigate property with Justin, like, it's hard to lose, you still have the potential, but if you know what's coming in the next 10 years still, and there's a lot of stuff coming to the particular town we're talking about, the sky is the limit, like we've seen in the last 4 years how, just $4 billion, $1 billion does to the town, and when I say $22 billion, it's just incredible. It's just scary what's going to happen, And now is the time, the doom and gloom, is to buy in these places because nobody else is buying. And with the amount of work, only 1/8 of the projects have to go ahead, and it's going to move forward, and well.